wonderful to see so many of you with us today. Given that I can see some of you have clearly not slept, you've been staying up all night looking at the election results, I hope that those of you have managed to get your teas and coffees and your breakfast. You need the caffeine and the sugar kick in the morning. It's a historic day today. More than 400 seats for Labour. A lot of new Indian faces also in the British Parliament. The first Tamil MP, Uma Kumaran. In Leicester East, a number of upsets. Jonathan Ashworth is no longer there. Two heavyweights who slugged it out in Leicester East, Rajesh Agarwal and Keith Vaz, unfortunately didn't make it. But Shivani, the Conservative candidate, won instead. So we've got some new Indian faces in the British Parliament, some heavyweights from the Conservative side, Liz Truss, Jacob Rees-Mogg and others are no longer there. And it marks a sea change for how Britain is going to be run over the next 5 years. India, of course, had its own elections just a few weeks ago. More than 620 million people voted. It was violence-free, it was safe, it was a real triumph of democracy. Whatever any Western commentators might say about the quality of India's democracy, that election process was very much best in class in the world. Compare that to what we see in the US, where multiple elections in the last 2 decades, it's been the courts that have decided the winners. You have paper counting, multiple court cases going on right now, litigating and relitigating something that happened 4 years ago. Amongst that, India stands proud in the world as the largest democracy, but also the most well-oiled election machinery in the world. In between those two elections, something even more important happened. India won the T20 World Cup. So just in terms of sheer numbers, I'm sure the Labour win brought joy to, let's say, 15 to 20 million people in the UK. The BJP win in India would have brought joy to, out of 620 million people voted, that did vote, let's say 200 plus million people voted for the BJP. But the cricket win would have brought joy to 1.4 billion Indians. So by those metrics, it was the most important thing to happen in the last 1 month. And I hope it happens again very soon. Today is about the India story and how it's presented abroad. I've always felt that the India story is presented in very narrow lenses sometimes, be it business and economics, be it society, be it politics, be it civil society in India. But the strength of India is in its diversity. Everything that you say about India and its polar opposite is true in unison because it's such a heterogeneous country. That's what we're here to celebrate today and this week. We're going to be talking about business, economics in our first session. We're going to be talking about politics and the political process. We'll be hearing from leaders in the fashion industry. We'll be talking to senior lawyers who work on commercial, corporate, and dispute cases across the countries. Later on this evening, we have a fashion show, and then tonight we have a drinks reception with, I think, nearly 200 people that have registered with the London Chamber of Commerce and Industry. Tomorrow, we're taking a different route. We have our first ever film conclave, part of India Week, which is devoted to India-UK co-production in movies. So a big focus on how producers and directors from India can come here and work. And a lot of those trade kind of conversations will go on tomorrow, which we're very, very happy about. And then tomorrow evening, we have our black tie dinner. Nearly 300 people coming along. We've got a number of stars that all of you will recognize from Netflix, from Bridgerton, from BBC, EastEnders, a number of stars from India as well coming. So that'll be a fun night. Today's the heavy stuff about the business and politics and corporate topics. Tomorrow evening is the fun. And of course, we'll have alcohol flowing from 6 o'clock until late, and we'll have a complimentary bar. So if you all still remember what happened on Saturday night by the time it's Sunday morning, good for you. Our first session is on what India expects to happen over the next 5 years and what we all expect to happen over the next 5 years of this new parliament. We will focus mainly on economics and business in this session. Can I please call upon the stage Brijesh and Arvind to join me?
A very good morning to all of you.
Good morning.
Brijesh.
Thank you so much for joining, guys. Could we update the slide? Thank you, guys. So today we're going to be talking about what we expect over the next 5 years. But before we do that, I thought instead of me doing brief introductions, why don't you both just do quick 30-second introductions into who you are, and then we'll get down to the questions.
So we got the A and the B here, just by serendipity. So Arvind and Brijesh. So Arvind, you want to start first?
Thank you. I'm Arvind Chari. I'm the Chief Investment Officer at Q India UK, which is an affiliate of Quantum Advisors India. We are India-dedicated managers going back when we started Quantum in 1990. And we manage money for a few large global pension sovereign wealth funds investing into Indian public equities. That's what we do. And in India, we have Quantum Mutual Fund, which is equity, debt, gold, ESG assets. I'm very new here. I moved to London 2 years ago. So welcome me and hear what I say.
See, Namaskar, and we run a wealth management arm in base of Gurgaon and a VC arm, and that's how we started. We believe in asset allocation. So we have got managed funds close to around 100 million US, and right now we also got a license shop in the gift city, so that any of you sitting in the audience wants to invest in India using your current British or American documents, we are there. And the one thing which is very clear, which we have seen over the last 15 odd years, is that the only one thing we know is we don't know, simply because we are living in a world of glorious uncertainties. Geopolitics is one of the folks, but having said that, planning is important, and that's what we help do and move forward.
Thank you guys so much. You've kind of answered my first question already by saying what we know that we don't know. My question was going to be, what do we expect for the next 5 years? So we have Modi 3.0, which is a reduced mandate for the government, but the BJP seems just as strong. Modi's grip on the BJP, at least for now, seems pretty strong, given that all the portfolios have been allocated to the same people that had those jobs just a few weeks ago. Only really civil aviation has changed hands to one of the coalition partners. We've had an election campaign that was not really focused on policies. It was much more focused on personalities and in some cases on polemics as well, which explains maybe why some of those votes drifted away from the BJP. Before the election, in terms of manifestos, BJP also didn't really talk about specific policies. And looking back even further than that, over the last 2 or 3 years, I feel like sometimes the BJP kind of lost steam after the first initial phases of Modi 2.0. A lot of new reforms or new policies have not been really announced and pushed through over the last couple of years. So now that we've got an opportunity for renewal, how do you see the next 5 years? Do you see new policies being pushed through, new regulatory reforms? How do you see it?
See, if I go back, so we have to, when I say move forward, we have to look in the past and see what is in the present. So, kal, aaj or kal. Big reforms have always happened when the parties in power did not have absolute majority. You go back to 1991, that was something which was a big event which happened. But having said that, sometimes majoritism also has come into play. We're talking about in India, basically 2017 demonetization which happened, and the after effects of that which is still being felt. One good thing which is there for the last 10 years, there was no leader of opposition. And now we have one, so there will be much more in-depth review, but that is something which we need to look into. Other parties which we strongly believe is that irrespective of the parties in power, commerce is which matters a lot. And that is what will also define how it wants to move forward. I'll give you some small, anecdotes or reality from what we do, so that how the financialization of the Indian economy is actually helping. In 2022, in India, the FIS took out more than $17 billion out of India after a very long time. So it was negative 17 billion. Can you guess what was the amount which was invested by the local Indians? Any guess? 2 times of that. 34 billion was invested by the Indian public in the Indian markets. So that's the reason why you find that the Indian markets today is on the upswing. The Nifty, the Sensex touched 80,000 just earlier in the week. So commerce will run. So talking to what can happen in the next 5 years, did anyone expect demonetization? Actually, no, but it did happen. What is happening out on the ground? So who has traveled to Jaipur from Delhi? How much time it took you, when you last visited from Delhi to Jaipur? 2.5 hours. So Delhi-Bombay Expressway, 2.5 hours flat, you will reach Jaipur. So you touch down at the terminal at 6 a.m., you can have breakfast in Jaipur. So that's how the infra is being built. If you go from, I'm from Kerala, but if you go from Kochi to Trivandrum, single side, it's smooth as a jiffy. So infra is being built, and there is no option. So infra will get built out there. So that is one positive, though albeit slow, but yes, it's happening out there. The road construction which is happening there is nearly 30 kilometers per day, and the impetus is to bring it more. So those basics which are being covered is there in play. Today, luxury, so I'm moving all around simply because, luxury is huge. So we have an office in Gurgaon, and just below our office, we have got a Porsche and a BM showroom. Diwali is a big day. Dhanteras, which comes 2 days before Diwali. Can you guess how many the motors were sold? How many cars in a single day from that showroom? I want to take a guess. 2.5 times of that, 26. So you talk about luxury, India is open there. You talk about, common man, it's out there. So the next 5 years, again, I believe commerce will run the pace. You are having labor reforms, definitely will be there. Auxano as one of the biggest factories in India outside of the US. So from that perspective, we personally believe that, the India story is getting unfolded. In the past, also it has been told, but now there is more action happening out there. Yes, when rain happens, you find some of the structures falling down, and that is not something which is good. But yes, there are also structures which are being built, which is taking the impetus forward. So summarize, I'll say that commerce will determine a lot of happenings which will come in play. And 2, what can happen is still unknown, but good things should happen.
I'll just zoom out a bit and talk about politics and economy. And if you see, India got freedom in 1947, India got constitution in 1950, but India got economic freedom somewhere in the 80s. Right? That's when India started looking west and opened up and allowed its citizens, private businesses, entrepreneurs to do what they're supposed to do. Previous to that, there were permits, there were regulations, it's still there. This bureaucracy is still well and alive. But that's when you saw a change. And 1989, when the Berlin Wall fell, India decisively started looking west in terms of economy and policy. And then the 1991 reforms were forced on us in terms of a balance of payment problem. But the work had been happening. Since the 80s, 70s, and 80s, you had documents and policies and measures, and India opened up right in one go across the pad. And if you look at since 1980 till now, the Indian GDP growth, the real GDP growth, has averaged about 6.2% per annum, right? In that period, since 1980, we've had now 12 governments. And about 4 or 5 of them are coalition governments, and the rest were single party. And I'll share a chart with you later through Pratik. If you scan through that number, GDP growth during coalition governments have actually been higher than in single party governments. And this has been true. And I made this chart first in 2004 when I joined Quantum, and Vajpayee government had lost and the markets had cracked. And they were despair saying that, oh, there'll be a coalition government of the UPA which will be problematic. And I said, it doesn't matter. It doesn't matter whether the government is on the left or the right, a single party or a coalition. India does what it does, which is to grow at the 6.5% real GDP growth, 11-12% nominal GDP growth, and that growth gets reflected in market returns. So if you look at Indian stock market returns over any period of time, over a long period of time, tends to average about 13 to 15, 16% in INR, and you remove 2-3% depreciation, and in the foreign currency, you will get between 11 and 12 and 13%. That is the story for India in a very basic sense. It's been the best story of investing across all time periods. Coming to that political aspect, as I said, it does not really matter. In fact, we were delighted by the result because of 3 major points. As I said, coalition governments tend to have higher GDP growth, and I'll take a bet that the next 5 years, the growth will be higher than the last 10 years that we've seen. Because the last 10 years, although Prime Minister Modi and BJP were in a coalition, they acted, behaved, and ran the government as a single party, right? So this is just anecdotal, but there are parameters, and we can talk about why growth is on uptrend. Second is our basic simple take on coalition government is a funny take in the sense that when you have coalition governments, the governments are so busy fighting each other, or the parties, they leave us to do what we're supposed to do. They have no time to, focus on you and tax you or go behind you. And that's a simple way to think about it. And it's actually true in some sense. Gurucharan Das, in his book, I think it was in India Unbound, wrote that India grows in the night. Because in the night, the bureaucracy and the government are asleep, and you let individuals and businesses and if you look at the India story, it is a micro story. It is a story of individuals, their entrepreneurship, their aspirations, and their beliefs. And that's what gets reflected in the market. So when India allowed private sector to do what it's supposed to do in the 80s, you've seen an increase from that Hindu rate of growth, or whatever is called, into what we are now, the largest growing or the fastest growing economy. And this will remain for the next 10, 15, 20 years because we have that scope to grow. So this is the way to think about coalition. The third point is India is a very diverse, as you all know, it's a very diverse country, regions, religions, states, languages, and politics. So think about the challenge that India has. Today you have South India, which has a total fertility rate, TFR, at about 1.6, 1.7, 1.8, which is what it is in Europe. And you have Central India, which has TFRs of 2.2, 2.3, 2.7. Think about the challenges and the opportunities and the need for what South India needs today and North India needs today. So if you have one common government without any representation of these parties or states, it will be what Karnataka needs today and what Tamil Nadu needs today is very different from what Bihar needs and what Northeast India needs. So it is always good for the government to have a representation from across different parties, different states, different regions, and different political sensibilities. And that is the best outcome for India. And that's why we were delighted by the coalition government. I'll answer your question in terms of what you think will change. Uh, in the parliament, the opposition today has 2.5 times more seats than what they had before, all put together. So there'll be more noise. You should hear a lot of acrimonious debate, and which is great. You need some form of action, activity in the parliament. In terms of the government functioning, maybe not much will change. As Pratik, you said that the speaker is the BJP, same speaker. Most of the ministers are almost same. The TDP and JDU, which are the two main partners to keep the government afloat, have not got any major departments. And maybe their need for the next 5 years is not national ambitions, but state level ambitions. So I don't think much will change from that. But think about, as you remarked, on like when you have single party, strong majority in governments, during Indira Gandhi, you got emergency, you got nationalization. Some people argue nationalism was actually good for a lot of Indians, but still you had aspects of governance which were which were not consensus. In the Modi government, you had demonetization, complete economic disaster, very horrible decision. It gave digital India in a different manner, but you could have achieved digital India without demonetization. So maybe those kind of really crazy ideas might not come through. On the social side, I don't know whether they'll be able to build consensus on, say, one India, one election, or uniform civil code, or even the aspect of delimitation. I don't know whether you're aware, but India will have to undergo delimitation because today, one vote of me in Tamil Nadu, for example, and one vote of a Uttar Pradesh citizen is very different. My vote carries a lot more because of the representation in the parliament. So I don't know whether that will happen in a manner which is either built in consensus, which is great, or this might all get postponed. But coming back to the main point, it does not matter for the economy. In fact, actually a good outcome. And that this real GDP growth of 6.5% that we've seen for the last 40 years may get increased, and you will still get that growth and outcomes, irrespective of whichever government is in power. And we can, if somebody has a question, we can go in detail as well.
Sure. So thank you so much for that. And I'll come back to both of you on specific policies that you want to see over the next 5 years, or think will come into the next 5 years. But Arvind, I just want to come to you. The day before the elections, or a couple of days before the elections, when the exit polls showed very, very different results, a thumping majority for the BJP, stock markets went up, they shot up. In particular, Tata stocks didn't do very much. Reliance stocks went up, Adani stocks absolutely shot up. Then on the day of the elections, there was a correction. And that correction was nothing much happened to Tata stocks, a little bit happened to Reliance stocks, and with Adani's there was a massive correction. And on that day, I think you've written recently in a note yourself that 10-year bond yields rose by about 10 basis points on that day, on election day. And the Indian rupee was about 0.5% weaker against the dollar. Does that mean that, and this might be a leading question, but does that mean that the markets felt that Adani and Modi were too intertwined? Or because the rupee fell, did the markets feel like actually economic growth is not going to be on an upward trajectory? What does that mean? Or was it pure speculation and it corrected itself after a few days?
No, the market is always true, and the market always tells you things that you should focus on. And so as you said, on the exit poll day, result day, when the markets opened on Monday, the markets went up by about 3.5%. Tata Group stocks, HDFC, Bajaj Auto were about flattish or slightly lower than that. And Reliance and Adani stocks were up a lot more, right? So the market is telling you that if Prime Minister Modi comes with a great majority, these are the companies which are going to benefit more than that. And on the next day, when the actual results came, those stocks fell by a lot more than the other stocks. And so the market is telling you who is close to the government and will benefit from government policy, who is a crony capitalist. You can make assumptions on that. And so if, as an investor, your first job is risk management, right? You're trying to manage various aspects of risk and then trying to earn a return. So if you're concerned about governance, the market is giving you a very clear feedback. And we've seen that over time. I don't know how many of you remember Satyam Computers. So Jan 7, 2009, Ramalinga Raju wrote a letter to the stock exchanges saying that I've been riding a tiger, I've stolen $1 billion, and I can't ride the tiger anymore, I'm getting off, and the stock tanked 60, 70%. If you make the same chart on that day, you could see which stocks had fallen, which is the market is telling you, who do you think is the next Satyam computers in, in the markets. So the market always keeps giving you feedback and tells you the reality of what they think about governance and businesses and markets. And it's for you as an investor to figure out whether you want to take that governance or crony capital risk or avoid that. And still, India, as I said, is very broad. There are enough opportunities away from all these large entities. And I'm not saying they're bad, they're great businesses. But from a governance perspective, do you want to take that risk? So that's one aspect of thinking. And that is very important to figure out, because if you look at global investors, think about how they invest. They really don't care about whether it's a capitalist government or a communist government or, or is authoritarian. What they tend to be more worried is about a strong man. Think about China, think about Russia, think about Turkey. And if you look at returns in those markets have completely crapped off. And the investors have made a argument that, if there are strong men or there is one single party or ruler, my returns or my investments might be always at risk, because you're Jack Ma, you're walking on the street, you get a tap on the shoulder, and you said, please get yourself reformed, I don't like you, and his business is taken away. Similar things have happened in Russia, similar things have happened in Brazil, similar things have happened in Turkey. And if you see the disconnect between their GDP growth and their stock market returns, it's been very different. Whereas in India, that's not the case, right? That's India's, if I put a chart on Indian GDP growth and Indian stock market returns, it's a fantastically close link. What happens in economy gets reflected in the markets. And that confidence for investors need to be there, saying that, no asset will get taken away, no policy will get changed, or no businesses will be threatened. And if that happens, then you see more investments in both domestic and...
So you're saying that if you plot a graph of GDP growth and stock market returns, where there's a very strong man type of government, those are not correlated.
We've seen a massive dislink. If you just look at China's GDP growth has been significantly high, right? They've grown at 14-15% nominal GDP growth. The Chinese stock markets have actually done nothing in dollar terms. Absolutely. In fact, people have lost money over the last 10-15 years in China. So you see those arguments. On the rupee and bonds, it's under the Prime Minister Modi's last 10 years, there are two big wins of, apart from infrastructure, which they've built fantastically, other two wins. One is macro stability. They've ensured that inflation does not go out of hand. And hence, you've seen the Indian rupee as very, very stable. The Indian inflation is very much under control. So the expectation for the bond market was that if Modi comes in with government or with majority or not, that will continue. And that's very, very significant from a bond investor perspective, that you're not hit by inflation and you'll have a stable currency. So think about from a foreign investor, when they're investing Indian bonds, they get 7% nominal yield, and then 2-3% gets taken away by currency. So they end up getting 4-5%. If that currency depreciates by more, then they actually lose money. So that was a faith that the government has shown in the last 10 years, that come what may, they've ensured inflation and currency to be stable. And that's why on that day, bond yields went up and the rupee depreciated. But if you see since then, all markets, equities, bonds, and currencies have actually have done very, very well, because of what I said before, that it is actually very good. It's a very good outcome. So Prime Minister Modi remains. So the continuity of reforms and whatever they've started and whatever they've built, and why we are in the upturn continues. And so it's beneficial for bonds and currency, and also for the equity markets. So you've seen a significant rebound in all three asset classes.
I'd like to add to what Arvind said, especially from the investor behavior side. So the day the results were out, we got calls from the investors, can we buy more? So which was unheard of earlier. So that's what investors at the ground were actually thinking about. Is an opportunity to buy more, and it was all buy at that point of time. So that whatever is falling, can we buy? Is that a right approach? Time will tell. Nifty over the last 10 years, as Arvind said, has delivered 13% annualized. Can it deliver more. If I look at the Dolex, which is like the looking about the returns in terms of dollars, slightly the Nifties were up by 20 basis points. Having said that, what is actually happening is that investors on the ground, both retail and HNIs, are actually looking to buy into the India growth story. Running a VC arm, I'll give an example. I like to give examples because that's where you can relate, because Arvind is talking a lot of macro. Let me complement that with a lot of micros. A 65-year-old lady having a 2 million kind of a book was asking, can we invest, say, around 250K into startups, which is unheard of. So 5 years back, if no one would want to do that. So from that scene, what you're looking at, the Indian markets are poised, based on the data points and sample points there, to be there. One more good thing, which will happen, as and when the Indian bonds are getting into the MSCI, you can find a massive bond rally coming up, which actually means that as an asset allocation tool for investors globally, you have equity, you have debt, and you also have the growth stocks or also the startups to be put into place. So from that perspective, there's a complete link of chain which is happening out here, not to ignore it.
Just staying with you, Brijesh, something you touched on earlier in terms of retail investors actively participating in the stock market. So the mutual fund industry's assets under management have grown from about 26 trillion rupees in 2019 to about 59 trillion in the year just gone until May 31st, 2024. So that's a twofold increase in less than 5 years. Has this been because it's easier to invest? Has it been because of confidence in the government? Has it been because of regulatory changes that help retail investors participate more? What is this driven by?
Okay, let me go back to 1994 again, because that is honestly a link. Morgan Stanley came out with the first, from that mutual fund stable, in India. And there was a queue overnight to subscribe to the mutual fund units, and it was all manual. The kind of rush it gave, and kind of, I would say the aura which was created was that this is the only mutual fund and you should only put there. But there is a genesis before that. UTI, which is the grand daddy of Indian mutual fund industry, came in '87. But Morgan Stanley actually, made it more visible in the terms of this. It's a different story that they went out of India. In 2020, again, because of what happened, the investors wanted to, deploy their assets. And prior to that, you also had the digitization of the investment process, which has actually helped and streamlined the process. Other part is that a lot of Indians who were actually, globally there, they were also guiding and informing the locals, okay, this is what is to be done. So I'm actually not at all surprised by the financialization of the mutual fund growth. In fact, over the next 5 years, please don't be surprised if the numbers double from this place, because today, even an 18-year-old is actually looking at and is also investing through the mutual fund space. And it is only less than 5% of the Indian investments are in mutual funds. Let me again compare the real estate. The first time in India, real estate, equities, as well as the bonds, all are going the straight line. I don't see in economics ever it has happened in the past. So this could be one of the first times which has happened. So from this perspective, yes, mutual fund industry is actually doing big time, and regulators also helped, simply because SEBI, which is a regulatory arm, the chief is the former, was a person who actually used to run the, in the financial service space. So the person actually knows both the buy side and the sell side dynamics. So when you have a professional coming in running the show, you can expect, it could, the regulatory process and the ease of investment should also be there. I like to also say one more thing, like in KYC, like in India, your name can be different. So sitting with cricket, VVS Lakshman. So his full name, if we have got a PAN, his social security card number, his name could be VVS Lakshman. But in a bank, his name could be Venkata Gupari VVS Lakshman. Or in a mutual fund investment, it could be different. So what is really happening is that the Indian government is also ensuring that a person has its complete name across all the documents, which today is a challenge and which is getting updated and upgraded. So all of this is being taken care of so that there is no misdemeanor happening at any point of time. So from that perspective, again, documentation, regulatory, the open thinking is coming into play. And besides that, the ecosystem is all developing into the mutual fund growth for India.
Can I quickly add to that? So if you look at in 1991, if I look at a household balance sheet, 11-12% of a household investments was in equity markets. And scams after scams after scams took that money off. So 1992 was Harshad Mehta. What he mentioned about Morgan Stanley was actually a scam in the sense that they were selling a mutual fund unit at 10 rupees NAV and saying that you're getting something which will be valued at 37 at 10 rupees. And so people rushed to that. That's the reason there was a crowd outside, because they were thinking of getting a share, a stock at 10 rupees, but it was basically a mutual fund NAV unit. And then you had the Ketan Parekh scam. And then I'm pretty sure all of you Indians have households back who have invested in something called unit-linked insurance plan. One of the worst aspects of investments, and people have lost tens of thousands of money. And then SEBI came ahead and cleaned up the entire system. So today, Indian mutual fund is one of the best and most regulated entity, maybe in the world. And really, standards have improved, corporate governance has improved, transparency has improved. In 2006, when we launched our mutual fund, we were the first online paperless investment company, like mutual fund to do it. But something changed in 2014. If you, that inflection point you talked about is not 2019, it's 2014. And that credit should go to Prime Minister Modi. I think that is his biggest win. In 1991, Manmohan Singh mentioned after his budget speech that investment is an act of faith. And that is what changed in 2014, where people, Indians, started having confidence and belief in the Indian economy, in the Indian markets, and of course, regulations and worked and mutual fund industry had evolved to a point where the digitization, the KYC, as he talked about. Today you can do 3 clicks and you can invest in anything. You can open a bank account, an insurance account, a mutual fund account. These things have gone up, but the confidence and the faith of the investors have to come, which is what call animal spirits, and you're seeing that in the Indian mutual fund industry. Previously, if foreigners used to buy, stock markets used to go up. When foreign investors used to sell, stock markets used to go down. That doesn't happen anymore because as Brijesh gave the data point, that today you have two times more investments by domestic Indians into the Indian markets as compared to foreign investors. And this is just the start. Even now, less than 7% of our household assets is invested in equity markets or mutual funds. That's a long, long way to go. And that's a very, very good outcome for India.
So the union budget will be in a few days or in a few weeks. What are the top 1 or 2 things that you'd both like to see there?
See, I would, personally speaking, I would not like to make budget as an event. So I'll again go back to history, like 91, it was not the budget which drove, but it was what happened before the budget which actually unlocked the Indian economy. So a lot of things will happen outside of the budget. So we make budget as a big event. But having said that, in the last 5 years, the finance minister actually did a double whammy on the stock exchange side. So that is something on the cap. So you said, okay, I'll have a transaction tax, STT, but you'll not have a capital gains, long-term capital gains. But then you bought in long-term capital gains because you said there has to be equality of wealth distribution. Yes, there has to be some taken care of the social side, but you have to keep your word. So that was a breach of trust, if I can use that word. So that is something where you should not be able to, you should not mess with that part of it. The other part is that we talk about the ease of doing business in India. The truth is slightly different. It takes a lot of time. So when we set up our own fund in the GIFT City, we said it will happen in less than 3 months. It actually took nearly 8 months, various reasons. So that is something which we are looking at. The most important part which is there is that the difference between the haves and the have-nots are increasing, in globally, yes, but also in over here too. Can we have a social mechanism to do that? There is an insurance policy, which the government run, which is taking care of the poor. So there is giving a 5 lakhs, which is less than, let's say, around $7,500 kind of a policy for the poor. Maybe that one can increase that. That is something which needs to be taken care of, which can come through, which can come. Other part is happening is that you're talking about renewables. That is one side, and climate change. Climate change is having a deep impact. And earlier in the week, you had the largest rainfalls in June ever in Delhi, and it was a crisis out there. So that is something which needs to be done. Other part which I'll also look into is, can we bring aviation? Because today, people residing in a tier 2, tier 3 cities, that is where the real money and a lot of wealth is there. That is where something, more airports which can be developed. And incentives on that side is something which we believe, can help growth happen and travel become easier. Those are the 4 points which we believe should be there.
I think one thing they should really focus on is on, as he said, consumption and income. So if you look at demonetization in 2016, the GST implementation in 2017, the credit crisis, ILFS, Yes Bank, India Bulls going under in 2018, and then COVID. These were 4 shocks which impacted the smaller businesses and individuals and workers a lot more than large business. Large businesses could manage the volatility of and shocks, but the small businesses and individuals and entrepreneurs could not. And the way I think about how Prime Minister Modi thinks about economy is in a very simple manner, is that there is very little likelihood of Rahul Gandhi defeating him in elections, but tomatoes and onion prices he can lose elections because of that. So that's why they've always had a very good and tight control on inflation, which also has an impact. So even during all these crises that I said, or setbacks, and in COVID, India did one good thing, is that they did not blow up its fiscal. So what you see in the Western world, where governments gave furloughs and money to people, and their fiscal deficit went up, and then you saw a surge of inflation across the world. India did not have the capacity to do it, and did not do it. So Indian inflation is been an average, but so has incomes have been depressed. So you've seen consistently over the last 4-5 years of shocks, where people's incomes and consumption patterns have been a lot lower than what it should be. So if there is one focus that I think they should allow, that some more money to be spent on social income or income support, so that, because if you look at every other aspects of the Indian balance sheet, the fiscal government balance sheet is in a great position. The corporate balance sheet has been the best that I've seen for the last 15 years. The bank balance sheets, PSU and private, are pristine and lowest NPAs in the last 10 years. So all these balance sheets are ready, but it's the households which are still yet to start consuming. And if you look at when private sector invests, is when capacity utilization for them goes up, say, beyond 75-80%. And we are at that level. If you see some more demand coming through in the economy, you will see private sector also start investing, which is why I believe, as I said, that I believe that economy is very much on an uptrend. And if you see some more consumption and income and social spending by the government in rural India and urban poor India, you will see that GDP is also going up. So that would be one expectation that you will have. They can do it through various ways, Narega spends, or spending more on rural India, housing, plus some income support, or some reduction in, say, GST, because very few people, 22 million people actually, about 60 million people file returns, and 22 or 23 million people actually pay any tax. So income tax is not any form of government income, but GST everyone pays. Anybody who buys a product or a service pays GST. I think there's a case to reduce GST, which has an inflation impact, positive, and leave some more money in the pockets of people to invest. So I would expect to see that, because I don't think they need to be timid about inflation and consumption now. This is a time to allow the economy to flourish a bit more and get that 7%, because at that 6.5%, which is a great level of growth, India will not be able to create all the jobs that it requires to be created, that 10 million jobs that they need to create every year, is not going to happen at the pace of growth and the investment that they have. You need to see that increasing. And maybe it might come about with some current account deficit and some inflation, but we have to deal with it over the next few years. So we'll see, hope that. And I'll borrow one of your points that you mentioned on capital gain that he said. And Pratik told me that only India and Pakistan have put capital gains on foreign investors. So maybe that's a point to think about whether they want to go that way or not.
Only one more thing to add, there is no succession tax in India. So I hope it remains. There is no succession tax in India. There's no estate planning tax in India. I hope it remains that way. And adding to what Arvind said, a lot of things will happen out of the budget, like GST reductions are already started in play. So those will continue to be there.
Arvind, you mentioned quite a remarkable statistic. 22 million people out of 1.5 billion people pay income taxes. Only 60 million people file. But on the lending side, you mentioned something else that is really interesting. For the first few years of the Modi government, certainly in the first probably 5 or 6.5 years, the bank sector was significantly stressed. They were not lending to Indian corporates. So on the one hand, Indian corporates were not able to borrow. On the other hand, Indian corporates probably also felt like, well, what's the point? Ambani and Adani are going to benefit from a lot of the spoils. So even if we don't do well in our investment, it's fine. If we do really well, then maybe tomorrow Adani will get asked to come into this space. But now we're at a stage where banks can lend and Indian corporates can borrow. So have we reached that inflection point where Indian corporates feel more comfortable and are now borrowing to invest in India?
See, so the comfort and confidence comes from two things. One is, which sector. So as you said, if you're entering in a sector where the large corporates or the crony corporates are already present, then a third or a fourth corporate would think 2 times, 3 times whether you want to invest capacity. So that's a part. But India has a broad opportunity. There is aspects of the Indian economy which is large enough for 3, 4, 5 large entities and small entities to come. So the confidence comes from demand, right? So if you look at the GDP growth data as well, in the last 10 years, given the way we have changed GDP data, as an analyst, we knew that if real GDP grows at 6.5%, I know that cement demand will be 1.2, 1.3x of that. I know steel demand will be 1.3x of that. I know scooter demand, a CV demand will be a factor of that. And those links are broken, given the way the GDP statistics comes about on manufacturing. We still don't get that. In fact, the CEO of Asian Paints mentioned this in the con call, saying that we knew this factor to be true when we used to forecast demand. We have no idea what that means today, right? So which means that the demand is lower. If I chart pre-COVID and post-COVID consumption as a factor, it is lagging all other aspects of GDP. So that the point that I made about consumption income and Brijesh made about the haves and have-nots, that is true. So if that improves, and we are seeing the signs of it. I follow CMI, which is India's best economic database, and they have a consumer sentiment survey. And finally, after 5 years, that consumer sentiment survey has now, the index level is now at the same level as it was in 2019. In fact, it is high. In rural India, it's gone above the 2019 level, which tells me that the people who have taken the hit on incomes and activity are now finally coming back and are ready to spend. And as they get more incomes as they spend, you will see private CapEx. Because CapEx is going to, only when there is a capacity utilization that goes above a particular level can you justify a CapEx. So I think we are on the, what you call, like a cusp of that cycle where, because as you said, because banks and corporate balances are ready, and consumption demand is finally increasing. We also seen increase in employment trends. Same CMI data, between 2018 and 2023 end, The number of people employed are about 400 million people. That's the total number of employed people in India, in the labor force, across all aspects. That number in the last 6 months has gone to 430 million. So you're seeing activity both in residential real estate, construction, and in businesses and other labor. So you're seeing that recovery. You will see a private investment cycle very, very soon. It's going to happen.
Can I add quickly on the consumer debt side? The consumer debt in India is the highest level, and I have to compliment the central bank, who has been playing a very proactive role to ensure that you don't find, if you can use the word, mishap over there, because that can actually bring down the India story. So today you can find the consumer debt. When I say consumer debt, what I actually mean is that the ease of opportunities to buy a big scale television or an Apple phone or high-end purchases. So that is happening not only in Tier 1, but also in Tier 2 and Tier 3. And with the lending fintechs out there, the RBI recently put in a dampener, if I can use that word, dampener, or I'll say restrictions, to ensure that the economy does not face challenges on this side. So instead of doing a band-aid, we're actually doing a surgery. So the central bank is actually playing a real important role, in a very proactive manner, which is very good to see in somewhere in India as such. Would you like to add, Arvind?
No, I think both RBI and SEBI are by far the best regulators that we'll get in the world.
So if I think about the components of aggregate demand, we've talked about 2 or 3 of them. So there's consumption, investment, government spending, and then exports minus imports, so net exports. So we've talked a lot about consumption, talked about investment. Any thoughts? So we've got 5 minutes left in the session. The speaker for the next session is just pulling up in his taxi outside, I'm told. Not in this session, but I'm sure we'll get the opportunity in later sessions. We're running to a schedule. Nitinji, we'll come to questions later. So do you have any comments on the G and the X minus M, the net exports and the government spending, how that might shape up?
So if you look at government expenditure, although the central government has focused more on what you call capital expenditure, infrastructure, as compared to consumption and subsidy spending. But if I look at all aspects of government, central government, state government, and what we call public sector entities, the total capex has actually been flat. It's been about 7% of GDP. So although the roads have been built and railways have been, new rails have been created and ports have got freed up, the government spend on capital expenditure of all forms of government has remained same at about 7% of GDP over the last 10, 15 years. So that's not changed. And that's the limitation of the government. The government can only do so many investments because of their efficiency and their bureaucracy and land acquisition. And that's why private investments have to come in. On the exports, I think Make in India is still, that China plus one story has yet to play out. Maybe in electronics, as he mentioned, Brijesh mentioned on Apple, India is a large market, so Apple can come and manufacture and export. You will see some of those in the semiconductors, in other electronics and activities. But for example, we've not seen that in auto ancillaries. We've not seen that in chemicals. We've not seen that as much in textiles at all. So that export story is still a glass, it remains a half-filled glass. And that's where the next focus should be, in the sense that India might be difficult to do business, but India is a large market. People can make in India and export, right? You can have both aspects, as compared to Vietnam, for example, which tends to be the China plus one play, where Vietnam can only export. They don't have a large enough domestic industry. India has a large enough domestic consumer market. So it's surprising that why we are not still getting large FDIs into domestic manufacturing for India and then exports. But that's a concept of function of policy and everything. I think the government is trying, but we haven't seen much.
I want to get Brijesh's thoughts as well, but I just want to explore something that you mentioned. So you're saying Vietnam is China plus one. Are you saying that India is not China plus one? So if somebody's looking to diversify away from Chinese supply chains, do they not look at India right now?
They will look, but there is an ethnicity aspect. Like if you're like the China plus one succeeds only when Chinese entrepreneurs and Chinese capital and Chinese labor moves out and does it, because they know how to build quality at scale, right? So you just look at the the Foxconn Apple example. India had the problem with China on the border at Doklam and stopped Chinese, they didn't give visas to Chinese individuals. And Foxconn had to write to the government saying that we can't work without the Chinese labor. And today you have a specific Make in India visa that India offers Chinese engineers and entrepreneurs to come and set up activity. So that's the way to think about. But there are enough other global MNCs who will move out of China because of cost, geopolitics, and instead of going to, say, Indonesia and Vietnam, will look at India. It will happen, but it should have happened 5-7 years ago, or but that's when the China plus one story took off. I'm not extremely sanguine about it, but I'm hopeful, yes.
So I think, Brijesh, you get the last word, both on the aggregate demand question, the two components that we've not spoken about, and as well as if you want to add anything on China plus one.
See, quickly, and I think Arvind has given a very broad picture, but I'll quickly give 3 green shoots. So we should look at, data centers, semiconductors, are industries which one should look into big time. On the auto side, India is going to add nearly 3 million capacity over the next 3 to 5 years. That's what across the board it has been said. So from that perspective, yes, these are some of the areas one should look into when want to put money into India and the sectors, and that is something we believe, a lot of action will happen. One, on the data centers part, India consumes nearly 20 to 25% of the data, but only 5% of the centers are in India. So look at the opportunities which can be there. We're the highest consumers of data. And having said that, the telco companies in India last week raised their prices by nearly 20%. So one more opportunity to look at to put money there.
Thank you very much to both of you. And while I've got you here, thank you so much for coming all the way from India for this panel. Those of you in the room who are OCIs or NRIs, if you're looking to think more actively about investing in India, and you want to route into mutual fund options, Brijesh is your man. And in addition, also there is Archana, who is at the back somewhere, who's also come from Delhi, from the mutual fund industry. Please speak to them about participating in the growth story over the next 5 years. While we've been on the panel, I've also seen that Sojan Joseph, who's a Malayali, he's a 49-year-old male nurse from India. He's just won the Ashford seat by a majority of 1,779, defeating the Conservative heavyweight Damien Green. So, as I mentioned earlier, lots of new Indian faces in Parliament, and there's one more here. So, congratulations to Sojan. So it gives me great pleasure to actually first, let's give these guys a much bigger round of applause. You can do much better than that.
Thank you.
Thank you.
I don't think all of you had an excuse of staying up all night listening to the results, and that's why you're tired and can't clap. But that last clap was a lot more acceptable. Thank you very much.